Hello guys, good afternoon. This is the market daily review. Today is August 7. So market is on something for sure. From the daily gap to New York high, 500 points, then a dump, 700 points, massive moves. So the New York session was, the morning session was a little brutal, but afterwards, the PM session, lunch, it was kind of low resistance, liquidity run, clean order flow. But let's take a look at what happened. So first things first, I have the NWOG, which is the new week opening gap on the chart, dialed here, and then the gap here on from the daily opening gap. Here I'll annotate it right here. This is NWOG high. And NWOG low. The reason I'm annotating this is because when I look at the NWOG delivery and the rally, before the 500 point rally, it tried to reach down to the low, and there's a wick down here which lags sell side, right? And in this case it means it was delivered inefficiently, right? When it does this, usually on the same day or the day after, it refers back to this level, specifically gets down to the wick. Okay, that's the first thing. I think I mentioned this during the live stream in the morning session. Then it rallied all the way up to the NWOG, pulled back, second leg. So here's the second leg high, and then it stayed. So when New York opened today, it was already completed. It already completed the second stage delivery, right? Which means at any point, if this price action here above the second leg high, I need to take this all the way. At any point, if this fails, oops, that's not what I mean to do. At any point, if this fails, that means the market is getting into a sell model, right? Because this is the second leg completed. If it wants to rally, if it needs to rally, it's going to break out, basically, so to speak, not going to come down in the range. So here, as you can see, it actually comes down, formed the smart money reversal. This is a higher time frame, I would say, smart money reversal. That's why it looks kind of choppy on the 1 minute. But let's dive in. Let's see what happened. So here on the legs, I was talking about these here equal lows during the stream. And then we have this flow here. I'm gonna annotate them, all of them, just because it attacked these levels. So keep them in mind, okay? This is clean lows. This is not a clean low, but here it's also clean equal lows, okay? And Q or ES, the market usually doesn't like this kind of price returns, right? All right, so the New York Open here, where's 930? Right there, 930. There is 1 minute leg, return back to discount, rallied, first fair value gap right there at 930. It retested the fair value gap at 930, delivered NWOG high, which means the buy side is completed unless it breaks out of there. Okay, I'm gonna delete the NWOG now because we have nothing to do with it. So it delivered here, it's chopping, and it's basically accumulating right above this BC, right? Which means there is a trap going on here. Market is trapping longs in this whole price action. Once it flips that fair value gap or BC, I'll see. Now we have a trap fair value gap. So here's what I was doing. because it flipped that fair value gap, I was looking at this sell side. Okay, that's like this, and here, this is clean, kind of clean lows. I was looking at those lows as a target. So the first breakout, I think there was an SMT. Let's take a look at it. Sorry guys, I'm kind of talking slow because I'm kind of feeling tired. But alright. Here at the highs, let's see if that was it the SMT here. NQ never took the high, whereas ES made a higher high, basically bearish SMT divergence. Then it displaced. I was waiting for this fair value gap to flip. It flipped. Then I was interested in going shorts and targeting these lows. Here's what I was looking at. I was looking at this dealing range. Came all the way up to the premium portion of that leg. Premium fair value gap right there. Went for the sell side. Didn't take it though. Fell short one tick and reversed. So here in this reversal, this is the sell side rejection. Formed an OB right here, and its main threshold was respected. Then it rallied. Basically a fake out apparently. You might think like this is going for the buy side, but you know, it did the same thing as it did during the first 30 minutes of the morning session. So here, I'll show you what I mean by that. Let's clean the chart a little bit. So it made a rally. Now we have a new leg right there. Didn't come down to the range EQ, but instead it started accumulating above a BISI. Okay, there's an accumulation here. It's not making a high or making a low, and there is a bearish SMT also present right here, if I'm not mistaken. Let's take a look at it. That's a bearish SMT, and also this one is a bearish SMT on a higher time frame. Then it broke the range, flipped this fair value gap. Now we have confirmed trapped longs one more time. Okay, this is the ugly part of market. Did it have to do it? No, it definitely didn't. But trapped longs, I would say. The first fair value gap after the SMT divergence here. This is the short, and it delivered sell side. Like all those sell sides are tagged here. 1, 2, 3, all of them got taken out. Let's delete them. Now we have the old lows here at equal lows basically. Now I'm watching this price action right here. If you missed this entry, so here's the swing failure right here in the fair value gap, which is basically called turtle soup. Swing failed. How do I now know it failed? Market want to rally here, right? Didn't engage with the buy side. You have this short-term range, came down to the range EQ. Second stage delivery is completed, and it just wicked through instead of displacing above. That's an indication of a turtle soup. Again, this comes with the second leg, not first leg. I was talking about this specific thing in the afternoon session during the live stream. So if you want to watch it, I'm gonna be uploading that as well. Then it broke down, made new lows here. Now we have a new range right there. Price never came to the premium portion of it because there is a breaker block, basically a higher time frame breaker block right here. We tested that and broke down. Now there is a new range with a new low. Same deal, came to the range EQ. This is the premium fair value gap now, and the upper portion of the lower one came up there, touched the premium fair value gap. I'm not sure if there is an SMT divergence there. Let me take a look at it. Yeah, there's no SMT divergence there. Oh, sorry guys. And here broke down again, went for the short-term sell side, kept going. Equal lows was taken out. It kept going. This is the first fair value gap after the range EQ retest. First fair value gap, second fair value gap right there. Basically kept going lower and lower. Now we have a new range. Let me annotate that. I'm gonna keep deleting all these lows that I annotated already, but I'm gonna keep the NWOG low and the wick from 6 p.m. basically acted as drawn liquidity. So here in this range, we have this high all the way down to the low. Right here, came up to the premium portion of that fair value gap, or of that leg, and it's the same deal here. So market rallied down and up afterwards. Now this is the first leg, right? Take a look at the second leg delivery. The first leg is never a short, guys. Okay, you expect the second leg. If second leg fails, that's the short, that's the turtle soup. Here, pull back down to range EQ. This is an SMT divergence, delivered the buy side, and look how it fails at the swing. Now second leg is completed and it failed. Now you can do a couple of things here. You can either short right away if you have a bias. If you don't, you can wait for the first failure and you can short the second candle open, or to be safe, you can wait this becoming a swing high. So meaning you wait for one more candle, the third candle is your short. You can take that. So delivered, second leg failed, completed. Now you have a short. The first displacement is the short entry itself. Went for the short-term sell side and kept it going from there on all the way down to where 6 p.m. wick. At this point, NDOG is irrelevant because the 6 p.m. wick was the drawn liquidity, as it was not manipulated or it was inefficiently delivered. So it lacked sell side the whole rally up and the whole rally down until it came down. Now here in the second portion of this leg, let's clean this chart. Now we have a new leg because market found new lows. You have this leg now. Market rally up into where? Premium. Now we're in premium. This is the first leg. Came down to range EQ. Second leg, which failed. I think this might be an SMT divergence. I'm not sure. I wasn't watching at this point. Yes, that's an SMT divergence with equal highs. So the second leg failed again on the pullback. Now this is your short. The first, you can either short the SMT divergence or wait for a fair value gap and short that. The first fair value gap after the SMT divergence is a very high probability short or entry. Here is the fair value gap. And it tagged, dig down towards the south side one more time, and it kept going lower afterwards, and market closed. Pretty fun afternoon session and pretty ugly morning session, but it's what it is. The swings are still large, so every up move is almost 150 points, and every down move is same thing, 150 to 100 points. So be careful, trade micros, do not trade minis, please. And here you can see that rejection. That rejection is the 4-hourly low, which was the drawn liquidity for one reason. Right here you can see that rejection. The reason was, I am posted on my channel, I'll show it here as well. I'm going to briefly talk about it. The 4-hourly chart. We have a swing high here. Swing low was set with kind of relative equal lows. There's a dealing range here on the 4-hourly. It came all the way up to the range EQ. First high, second high, third high, 3 drives into range equilibrium, indicating pullback. There is a lower time frame SMT here in between lows. ES has a red candle, Nasdaq doesn't have a red candle, which means it is still valid because of the SMT. Now you have the red candle and an order block, so you can take a look at basically the standard deviation of that OB for your weekly target. So minus 1.5 should get tagged tomorrow, which is 17,713. Minus 2, 17,544, and then we have relatively equal lows. I am not sure if they will leave this for next week or not, though, just so you guys know, because this is basically this week's low. It could just come down to minus 1, minus 1.2, and then close in the range. Leave this for tomorrow, next week, basically. We'll see. So here on the 4 hourly though, red candle, the high probability target is the OB low. If it displaces below, you have this inefficiency and dog low, and then 4 hourly low is another high probability target. The reason 4 hourly low is a high probability target is because of the 3 drives. 3 drives on this time frame will take out the opposite end of this market, meaning 3 drives up on the 4 hourly will target the sell side on this time frame, and it got tagged right before market close. I'm expecting more downside delivery going tomorrow. I'm not sure if it's going to retrace. I would favor if it leaves 4 hourly fair value gap here, like something like this maybe, and it goes for minus 1, minus 2 right away instead. It might refer back to the end dog here because it was inefficient. Just be mindful about that. But in that case, I would like to see a fair value gap first. So it will be a retest of a fair value gap. That would be ideal. So hope you guys find this insightful, guys. I'll talk to you tomorrow. Have a good one. Have a great night.